Hi everyone and welcome to Beyond Tomorrow, a new series from the New Zealand Herald in partnership with MYOB, where we tackle the unprecedented business environment affecting thousands of small and medium-sized enterprises across New Zealand whilst the world battles to slow the spread of the novel coronavirus. I'm Will Trafford and every day I'm joined by Ingrid Cronin-Knight, who is back after yesterday. Hi Ingrid.
G'day Will, it's great to be back and exciting to be back when we're talking about some of the latest government announcements and what that means for helping our SMEs navigate this cash flow concerns.
Yeah, you gave us a bit of a foreshadowing on this. I feel like you're quite in touch with the goings on in Wellington, so you'll be a big help through this. Alongside Maggie Jaques, a tax director from Nexia New Zealand, the chartered accountancy firm. G'day, Maggie.
Hi there, thanks for having me along today. It's great to be here. So yeah, obviously we're pretty excited, or I'm pretty excited about the government's announcements and just have been looking through some of the detail of that today. So hopefully we can shed some light and help some people understand and make sense of the rules.
Yeah, Ingrid, big new moves all around sort of taxes and tenancies, right?
Yeah, I think you'll find on the tenancy front, I think people were, expecting or hoping for a grant of some sort, and they didn't quite get what they were looking for. What they got was more time. So, if you can, navigate your way out and figure out your way through to pay, your obligations that you might have to do in rent. Then there's more time for you to sort that out in terms of, the time frame to evict a tenant now goes up to 30 days as opposed to 10. And then the time frame for mortgagee sales or on goods has also extended out as well. And so I think that's just given a bit of breathing room. I think that some small businesses and medium-sized business owners would have wanted some more cash flow relief, but that's where we get to the tax changes, which I think that Maggie can provide us a good amount of insight on.
Yeah, do you get the feeling on some of these changes, perhaps, that it seems like the government might be ever so slightly pivoting to what we talked previously about, Ingrid, of sort of not throwing good money after bad. So buying businesses time, but if that business isn't really going to work, maybe not sort of providing the support to just sort of keep it delaying the inevitable, I guess.
Well, I think there's an element of that came through, but I also was quite excited about some of the investment for startups. So when you look across the three major levers I saw there, the first one was from a cash flow perspective. They've given Inland Revenue more rights around delaying your payment and the terms with which you can make those payments. So that's going to free up cash flow for businesses, but equally for viable but vulnerable businesses, there is, the tax loss carryback scheme, which I'll get Maggie to take you through the details of, but that will allow you then to get access to cash if we can figure out how you can get to it. And that's probably the key thing, is getting cash into the hands, like with the wage subsidy. The government's done a tremendous job getting cash into the hands of business owners. And if they can do this for this scheme, I think that's good. And the other thing that I thought was really good around supporting small business owners, or perhaps startups that are wanting investment, is that now from a venture capital perspective, you can carry forward your tax losses into a different shareholder arrangement. I think that's actually quite elegant because investors will actually get a greater gain from that as well. So I think there's a lot of elegance in there, but we can talk to Maggie about some of the nuances in there that you need to consider.
Yeah, let's go into the kind of workshop mode, if we will, because this stuff is sort of boggling the mind for me in terms of getting my head around it. You talked about obviously the 12 weeks in terms of that cash injection for employment. Now these sort of more changes around tax, I guess, Ingrid. But on this one, Maggie, the first note that I've got here is claiming back tax paid on last year's profit against your forecast losses. Can you sort of get in and explain what that means?
Yeah, so I guess it's a really positive move by the government, and it's basically allowing you to cash in your tax losses or your expected tax losses this year and receive a refund of tax you paid last year. And the government's got two schemes, so they're two proposals. So the first one is a 1-year proposal, which is, I think this is the one that we will see being managed in a more similar light to, for example, the wage subsidy. And I think the government is rushing through this legislation. The idea is that cash will be paid out, and also that people can take into account the effect of it in their upcoming 7th of May tax payments. But the basic idea is that if you made a profit last year and you have paid tax towards that profit, you're allowed, and you're expecting to make a profit in the 2021 tax year, then you're allowed to offset that loss against last year's profit. So if you've paid tax on last year's profit, then you'll get a refund. And likewise, this upcoming tax payment on the 7th of May is the final tax payment for the 2020 tax year, meaning that you might decide there's no further tax to pay, as well as potentially getting a refund. So that's what the government's aiming for there.
Ingrid, we always talk about, sailing pretty close to the wind with small and medium-sized enterprises in New Zealand in terms of how much cash they got. Is this one that'll have a pretty material impact, or? Yeah,
look, I think what this is on the getting the cash on it. What we've seen from a revenue perspective, when we did our MYOB business monitor last year, we found that 26% of small businesses and medium-sized business owners expected their revenue to increase, and 26% expected it to decrease year on year. We surveyed right in the middle of the lockdown, and so the 400 clients that we surveyed after the lockdown happened, we saw a material change where only 12% expected their revenue to lift and 51% expected it to decline. So ultimately you can show that people are going to have less coming in, and that's clear to them. And so this allows you to have some extra cash, because you've in some cases you've still got your fixed costs that you need to meet around rent, insurance, and personnel. And so this will allow them to cushion that a little bit. And if you can get that cash back into the business, then I think that they'll help survive and navigate this as we see our way through the changing alert levels.
Any idea, Maggie, about how you actually do this in practice, how it's going to work, or is it more sort of aspirational and the concepts there, but not quite the execution yet?
Well, that's a really good question, because we've seen how easily the cash has come through with a wage subsidy. And I think that, practically it's not going to be exactly the same. And I also just wanted to make the point that, a lot of businesses will be expecting a downturn in their revenue, but it doesn't necessarily mean that they'll make a loss in the 2021 year. So, for those businesses that are sort of struggling and will potentially still make some money, but they won't make a loss, these changes probably aren't going to assist them much, because they won't be able to have that loss to offset. Yeah. And I think that in terms of getting access to this, to the cash loss, the tax loss carryback, it will be a case of doing that via the tax system. So there won't be an application process that we've seen for the wage subsidy. It'll just simply be in the form of paying less tax. And I would have thought a simplified regime where the IRD will allow you to receive a refund of the tax you've already paid for the 2020 year. So it will just primarily be driven through the tax system.
It's kind of a good thing that it should basically help the businesses that are hurting the most. Is that the right read on that?
Yeah, it definitely will help the businesses that are hurting the most, in terms of, the ones that are expected to make a loss. I mean, this change or this package is really going to benefit a business that was profitable last year and this year is suffering massively and will make a loss. So that's the business that it will benefit. But I guess I'm also pointing out that it's not necessarily going to benefit all SMEs, or all businesses for that matter. And I think it's really worthwhile actually looking into this a bit closer, more closely, to see whether where you're going to fit in terms of your factual situation.
Quick question, Maggie. How do you project the loss and then calculate what you think the profit's going to be in this environment?
Really, really good question, because we are in April, and if you've got a March balance date, you're literally 1 month in, or if that, into your financial year. So the government in their examples have said, running a range of forecasted options. So you might do some forecasting based on current results to date, what you think is going to happen. And I think they are expecting you to do, say a few different analyses in terms of, a few different scenarios, and then picking the most likely or the most conservative one. But a really, really good question, because we simply don't know what's going to happen. We don't know how long we're going to be in lockdown for. And I think, even if we go down to level 3 quite quickly, that's still very limited, in terms of who can operate and what businesses are allowed to do, and that type of thing. So I think it's a fantastic question, and I think practically it's a difficult one to answer, and I think you just need to make your best judgment and your best call and put some some supporting guidance around how you've reached your decision, in terms of deciding that you're going to cash in what you think is going to be a loss-making year.
And how important do you reckon it is to get a accountant or tax advisor to help you navigate these particular changes?
One of the other announcements that the government made today is that they are increasing funding for business consultancy services through the regional partner network. So, that's also, I understand that you're able to use that funding to get, for example, cash flow assistance. So if you are needing to, prepare a cash flow or a budget in order to justify that, then you would be able to do that. But I guess, see the bigger picture here. I mean, ultimately, you want your business to be successful. You've probably got staff relying on it. Use this as an opportunity to actually plan, how you're going to get through this. What's your continuity plan? Because at this point in time, we've got basically cash flow, and this is the first, most crucial point. And then the longer term is how I'm going to survive, how we're going to get through this, how the business needs to change. So, this is a perfect chance to take advantage of that, while also, satisfying the legislative requirements that you need to in order to access the relief.
Maggie, the next one, the government changing tax loss continuity rules to make it easier for businesses to raise new capital without losing the benefit of existing tax losses. Again, over my head.
Sure, thanks for that. So basically, the idea is that startup companies generally incur lots of expenses and they don't have a whole lot of income coming in. So you've got tax losses that are sitting in startups, and the government, and I think that this has actually been on the government's radar for a little while in terms of relaxing those rules so that those startup businesses can attract capital, because the issue there is that if you've got a loss that's been incurred while you're in startup phase, you need to have at least 49% same shareholding from the time you incur that loss until you use it. So basically, once the business is profitable, you need to retain 49% of the original shareholding, if that makes sense. So the problem there is that when you're going out to the market to try to attract capital, you lose that continuity of shareholding because, the investors might want, say, 60%.
Diluted, and it all changes all over the show.
That's right. And then, you lose the benefit of that. So the government is saying that we are going to, help these businesses to attract capital and to get cash injections via investors, and we'll relax the criteria so that instead of there being a continuity rule, it will be a same or similar business test. So providing you can demonstrate there's a same or similar business that's carrying on after the shareholding change, then it looks like, you'll get to retain the losses.
Yeah, you both must have been fairly optimistic about them beginning to define what safe business was as opposed to essential.
I was going to say, I think that what's important and considerations for business owners as they think about that is contact tracing. How do they trace who does what, and ensuring that people can still maintain social distancing in the work environment. And so if they can do contact tracing across the supply chain that they might have, as well as social distancing, those to me would be the two ingredients you as a business owner will need to really consider as you think about your operations and preparing for exiting out of level 4.
Hey, I've got a note here. You talked about the flexibility to file and pay tax later. Notes around like GST and PAYE and stuff like that. Does it look like there'll be any movement on that, or not particularly?
We haven't got legislation yet to confirm it, but I did have a look at what was proposed, and they just said that they were going to be greater flexibility of the Tax Act, so we may well see movement on that. That being said, I think that the IRD would prefer that, and the government, that you pay, if you're a business and you're struggling to decide what to pay first, that payroll and GST get paid first, and they're given the priority, and then obviously the income tax, while still important, that's the one you would be trying to negotiate on. But I mean, also note that the IRD are willing even for things like payroll and GST, they're willing to enter into instalment arrangements and negotiate, particularly if businesses are suffering.
If you've never been one of those people that's called IRD before and been like, listen, I got a bit of a problem, how do you go about it? Just a refresher course for us, maybe.
Well, for our clients, we would, get all the information and then negotiate on their behalf. And I guess, the reason that we do that is that the IRD are working to legislative guidelines. So, you might have the best circumstances in the world, but if it doesn't fit with what their criteria is, then they're not going to be able to, provide you with the relief that you're looking for. So I actually would recommend that you go, via an accountant or a tax agent or something like that, who is familiar with negotiating that type of arrangement. You are able to do it online. So if you want to negotiate directly with the IRD, then you can go online and request an instalment arrangement. And that's certainly an option. But I guess, as I mentioned before, I would just caution that you are fitting in within what the IRD requirements are. So sometimes it's quite good to go in initially with your best foot forward.
And I guess the thing is there's so much happening around, in terms of different policy changes that'll affect your business. It seems to me like you really want to talk to someone, right, Ingrid? If there's any possible way to do so, you want to go in there with someone to sort of guide you through it.
For any business owner, we'd really highly recommend that they get an advisor of some sort to help support them through this process. We always recommend, and it's always good to have someone in your court. When you're the owner and you're managing, you've got a payroll to make. Sometimes you don't get the most sound advice from the people in your direct network, and so having someone that's independent here can make a difference. And I think that's what the government has looked to complement that with what Maggie spoke to earlier, which is supporting and funding those that are in the business partner network to help provide better advice to small business owners. And I always believe that the best thing for you to do is to get your facts. And if that's to have, where you're currently at, and then a couple of cash flow scenarios, 2 or 3 that you can then go and talk to people and say, look, we've looked at all these things, here's the facts, then you're in the best position then to negotiate with suppliers and with Inland Revenue.
I'm going to try and actually find my words again, Maggie, and ask you a little bit about some fairly significant moves in the property market, I suppose, right? At least, from the landlord perspective and the tenant perspective.
We've got a few commercial property clients, and, I think they sometimes get a bit of a hard time of it because the perception is that, well, they've got these, valuable assets, therefore they must be doing all right. But, the reality can be quite different. I mean, often that commercial property has, got a reasonable debt loading on it, and, they don't often have a huge staff to maintain the property, so the wage subsidy probably isn't going to help them. And, they're struggling too because they've got debt repayments that they need to make. They've got tenants that, can't afford to pay or aren't paying, or trying to, negotiate a reduced rent. So I think they're in a bit of a tight squeeze, and I would actually like to see some further relief for landlords. And likewise for tenants. I mean, I definitely appreciate that the situation that they're in terms of, not having these outgoings for lease costs and not being able to get in there and trade and earn income from the property. So there's a real issue there. And I guess that the government's proposal to extend the time frame for people to negotiate and sort out the issues for a bit longer is a good thing. But I would like to see more in that area personally.
Hard thing when you got a centre-left government, Ingrid, and property wasn't actually, they weren't necessarily the biggest fans of property investors. When they came in, they made sort of no bones about it. They said it. Is that kind of what's happening here? It's not a particularly populist move to give landlords more help from the tax base.
Oh, look, I think see it slightly differently. I see that this government's really committed to changing us from being a low productivity country to higher productivity work. And trading houses between each other is not how we're going to grow the wealth of the nation. What I think this shows is actually there's a fine balance, because commercial property investors can be mum and dad investors as well. They've taken their nest egg and they've invested into commercial property. And I think that there is a need to balance both sides of the equations. When we spoke with Brett Gower the other day, he talked about, their constraints and the fact that they, have their obligations, as Maggie has just said. And so we always recommend, if you can, the best way through that is to see if you can come out with a fair arrangement between the two organisations.
Hey Maggie, how comfortable are you sort of with the moves from the government in this latest batch of announcements? Are you sort of feeling we're in a safe pair of hands?
Yes, I think it's actually largely, I will obviously, being a tax practitioner, I will pick through the detail of it. But I think they are really positive moves, and I think, you really can see that the government is doing all they can to, not to let our economy completely fall flat and to soften the blow. There's this latest lot of changes. It won't apply to everybody. It won't save every business, but I think on the whole, they are positive.
Hey Maggie, we've talked about the $25 million being invested into consultancy. If you're one of these businesses looking at all these changes and thinking, no way am I going to be able to deal with sort of navigating this, where should they go to?
Well, I would start by going to the Business Partner Network, and that's basically who you need to go to, and they will most likely direct you to your local employer manufacturer association, Chamber of Commerce, and they will be able to put you in touch with approved providers. And, really depending on what your needs are will depend on who you end up with. Our firm are registered with the local Canterbury Employers Chamber of Commerce as a provider, but obviously not every business needs cash flow or tax advice. There might be some that need HR or consulting, and they can certainly put you in the right place.
Ingrid, before we go, I was going to ask you about new data from MYOB on the confidence the SME segment has about in the government, I guess, essentially, and particularly with the latest moves. You've got some new data on that?
No, it's really exciting. What we've seen is there is a lift in the confidence of this government from SMEs and business owners, and so it's lifted from 21% to 30% at the end of March. And so I know when I was talking through this research a few years ago, that would have been in single digits. And so it's great to see the support. And I think that we will have actually seen it climbed even further as they navigate the challenges here. And the more that they can give certainty around what businesses can trade and in what environments they can actually work, I think you'll see that lift even further.
Ingrid Cronin-Knight, MYOB's country manager, and Maggie Jaques from Nexia, the chartered accountancy firm. Thank you both so much for the really helpful information navigating through all these changes. Remember, we want to hear your questions at home as well. Email us video@nzherald.co.nz. Until next time, I'm Will Trafford. Bye for now.